The key to accumulating wealth is to invest. Warren Buffett is a living testament to this. Warren achieved his $113 billion net worth today mainly because of his investments. You can also do the same. Albeit not as wealthy as Warren, but still, investing can pave your way toward financial freedom. You don't even have to start with a big amount of money. If you have an extra $1,000 right now, you can start your investment journey with that. In today's video, we'll talk about how to invest your first $1,000 in 2022. Stay tuned because we will discuss your options and which of them might be best applicable to your situation. So make sure to watch this video to the end. This is Financial Intellect, where we promote that to be finance savvy, we are your buddy. Now let's get right into the video. Option number 1. Purchase property and then rent it out. Rather than splurging on luxury products like gadgets and cars, you should consider investing in real estate instead. Many people's lives have been revolutionized by the real estate industry, and it can also help you do the same. Why not consider purchasing and renting out real estate that will enable you to earn at least $2,000 per month? Aside from collecting passive income, investing in a real estate business can also help you learn more about the local market. However, if someday you decide that you don't want to keep the property anymore, then you can just sell it and get back your investment. You can even get back a larger amount since the value of the property may have increased by then, which means you may be able to sell it for a better price. Option number 2. Place your funds in a savings account. You might wonder, can you really buy real estate with only $1,000? Of course not. While real estate investing is a good investment, it is not cheap at all. $1,000 may not be enough to help you buy a home. However, putting that money in a savings account can also allow you to earn more because it can generate interest, which may arise over time. But before you decide to open a savings account, you should first learn how the bank operates. Although the bank compensates you for each dollar you keep in your savings account in the form of interest, don't forget that the interest rate fluctuates from time to time. If a bank provides 3% interest, that indicates that for every $100 you deposit in your savings account, you will receive $3. Your money will be taken by the bank, which will then lend it to a borrower at a higher interest rate. It will then distribute a piece of the profit to you. In most situations, banks give 0.8% interest to consumers who deposit money in their savings accounts. This indicates that if you invest $1,000 in a savings account, you should expect to get an additional $8 after 1 year. Unfortunately, since the start of the worldwide pandemic, interest rates have been low. As a result of the pandemic's economic impact, banks were forced to decrease interest rates in order to entice more people to spend and borrow. Banks make money by lending money to people. They deal with both savers and debtors. When things ultimately return to normal in a few years, interest rates are likely to rise to 2 or 3%. And when savings account interest rates rise, you should definitely consider saving the $1,000 for a longer period of time to earn more money. Before we move on to the next investment, if you love content such as this, give this video a like, subscribe to the channel, and turn on the notification bell so that you will know when we've posted new videos. We'd love to give you more content such as this. Now, moving on. Option number 3. Purchase government bonds. $1,000 can also be used to buy this form of debt-based investment. It entails lending money to the government for a set period of time, and in exchange, you will receive interests. This is what we call a coupon. Bonds are usually used by the government to raise funding for new initiatives. For instance, if the government wants to build a new school or road but doesn't have the funds to do so, it will issue an IOU. If you put $1,000 in a 10-year government bond with a 5% coupon, you will receive 5% of your investment as interest every year. And when the bond matures, you should expect to also receive your $1,000 investment back. However, these days, the government bond rates are low due to the global epidemic, unlike before the outbreak when government bond rates were as high as 3%. Government bonds also have various maturity rates. Some mature in a matter of months, while others take 10 to 20 years. This is why government bonds are a fantastic method to invest your first $1,000 if you want a safer investment option. But remember, government bonds, like any other type of investment, are not fully risk-free. So if you wish to really purchase government bonds, we recommend buying US government bonds as it is the safest option. Option number 4. Make a stock market investment. Investing your $1,000 in the stock market is also an option. Compared to government bonds, the stock market can help you earn more money. Money can quadruple or triple in a matter of minutes in this type of market. However, because the value of shares in the stock market can swiftly fluctuate, there is also a high chance of losing money in minutes. According to reports, the stock price of Amazon jumped by 80%, while the stock price of Tesla increased by 721%. The danger of investing in the stock market is larger than that of investing in government bonds. This is because you can acquire company stocks, and then if the firm collapses, you could lose all of your money. You must understand how the stock market operates in order to profit from this form of investment. Try to invest only in well-established businesses. If we compare a company like Apple to a company like Tesla, for example, Apple is more well-known. Tesla, on the other hand, has greater room for expansion than Apple. Because investing in the stock market carries a significant level of risk, it's necessary to analyze your circumstances if you only have $1,000 and no other assets. Investing in the stock market may not be a wise decision because you could lose everything. As a result, this sort of investing is not suitable for everyone. So before investing in the stock market, make sure you perform thorough research and that you have a plan to hold the stock for a very long time, or at least a minimum of 10 years. Also, consider making an index fund investment. An index fund is a type of investment that follows a market index made up primarily of equities or bonds. Investment in an index fund can help you reduce the risk of stock market investing. Investing in a low-cost index fund, according to Warren Buffett, is a good idea. The S&P 500 Index Fund is one of the most widely followed market indexes, as this shows the 500 largest firms in the United States. So when you buy index funds, you are actually buying a small piece of the 500 largest firms in the United States. Just remember, though, that some companies will fail while others will grow. You can buy index funds through Vanguard 500 or QQQ ETF, as well as Invesco and Fidelity Zero Total Market Index funds. If you want professional guidance, you can also buy stocks and index funds through a broker. Find someone who has sold stocks before and open a brokerage account with them. Nowadays, different brokerage businesses have developed apps that allow you to buy stocks using your smartphone instead of calling a broker. Look over the many apps. Select one and download it to begin investing. You can open an account with a mutual fund business that offers the fund, in addition to buying shares and index funds through a broker. And that concludes today's video, guys. Do you have $1,000 to spare? What are your plans for investing in it? Or better yet, which investing option do you like from our discussion? Let us know in the comment section below. We'd love to hear your thoughts on this. And with that, thank you very much for watching. If you like what you've watched, stay tuned for more videos. Bye, financial buddies!